Hello, hello, hello. Welcome now, stock traders. Let me go ahead and adjust the mic here. So this is going to be kind of a relaxed, very well-informed video. This is for long-term investors. This is not for short-term investors, investors that are waiting for the squeeze or anything like that. This is going to be a video that's going to be for quality investors that want to essentially see this company out and see what's going on. So without further ado, if you're short term, please, you're not really going to get a lot of value out of this. This is for people that are wanting to hold for the next 5-10 years. Okay. All right. So I got me, just made me a nice espresso. We're going to go ahead and have a nice beverage, bring a beverage, relax, right? Enjoy. And without further ado, let's get started. So right here, we have a, let me share with you here. And I'm going to make it bigger for you guys. We have a 58 page document of Clover. And sometimes you have to look at the past in order to see how things unraveled in the present. So we're going to go ahead and we're going to go through this SEC filing. And this filing was actually done, the date of this filing was actually November 2020. Okay. And within this, there's a lot of valuable information. And we're going to break these down because it's important to see how a company, what has a company said, what has a company stated, and how has a company performed to that statement. Okay. So like, let's say, for example, a physician offers a prognosis and the prognosis sometimes doesn't come true. Like, oh no, my doctor said this. And, sometimes you might get a little bit of that, right? And sometimes that might not, sometimes, plans change. But overall, we're going to go ahead and go through this and let's get started. Okay. So first things first, see if I can zoom in here. So the first highlight, and I read the whole document. So we're going to go ahead and pretty much 58 pages. Can you believe, right? We're going to go ahead and go through it. And I highlighted a couple of key things. So first things first, there's almost a full, on average, one net new diagnosis confirmed by physicians via Clover Assistant. And this ties into gross margins side as well. Okay. So what the Clover Assistant, what it's able to do, and this was back in 2020, I can only imagine what happened now. The Clover Assistant is essentially able to find a new net new around one new diagnosis, which adds to the value of the company of being able to detect diseases that unfortunately would not, sadly fall through the cracks. Now, I'm in healthcare, and I'm not like, gray-haired physician that's been in the game for quite some time, but you don't really have to be to see how broken the healthcare system is. I mean, the way a good analogy that a doctor, when I was a first-year medical student, told me, she said that we really don't intervene until the plane starts falling. That's sad, right? So it's until it's a little too late, right? And that's kind of how, so if we're able to catch a disease and do something called preventative medicine, which millions of billions of dollars is being invested in, especially genotypes. It's part of one of ARC's portfolios. It's not referencing it as a form of like, it's not just her. The government is investing a lot of money in genes, right? In fact, a gene therapy just came out of a hospital from Europe and it cured a particular type of cancer, I believe blood cancer. Okay. Let's go ahead and drink some of this here. All right. So we're going to go ahead and go through this next highlight. Okay. We're going to be talking about this. Okay. So we believe our great plans put us in a position to take advantage of secular tailwinds that we are seeing in the market. As mentioned earlier, MA is growing at 14% revenue CAGR and is expected to have 34 million members by 2025. This means that individual non-S&P market, which we currently focus on, will likely have somewhere in the order of 24 million individuals. We shared in our original presentation that we've been able to take 50% of the net new membership growth and the individual non-S&P market in our established markets. So they're able to take 50% of the net new membership growth of this. And as we know, there's going to be a huge ramp of you know, patients and elderly populations that are going to add to this essentially tailwind, which is a wind blowing behind Clover Health to essentially propel them to becoming not only a profitable business, but actually a business that is able to compete with the incumbents. Okay, so that dynamic gives us a lot of confidence as the market gears up for extremely rapid growth over the next 5 years plus, particularly in 2023 and beyond. Now, most folks don't read information from way back when. Again, it has to do with short-term investors, but here at Al Stock Trades, we like to go ahead and focus down on a company and break every little aspect about it. Okay, and try to see if we can find some patterns. Because a lot of let's not kid ourselves. Wall Street analysts don't do this. Okay, they don't. Maybe out of one institution, there might be a couple of smart folks within that, but other than that, they don't really do that. Okay, so let's go ahead and read this. This transition puts us in a position to rapidly expand in 2023 plus time frame by adding millions of Medicare eligibles to our addressable population in the median term. Okay, so there's a couple statements of this that did come into fruition and that did not come into fruition. So the first things first was the COVID-19 pandemic really took a toll on Clover. It really just kind of really put a wrench in Clover and a lot of healthcare companies, but especially if you're starting out being publicly traded, Clover, COVID really put a damper on Clover. Then on top of that, the Federal Reserve printed so much money and they gave out so much money that inflation peaked to a level not seen since the 80s. So then now Clover has to deal with that. And on top of that, the market decided, because remember in 2019, before a lot of folks started investing in the market, a lot of companies were negative free cash flow, but they were trading multiple levels and beyond their revenue, beyond their obviously free cash flow benchmark. They were negative free cash flow, negative net income, but yet their revenues were trading significantly higher. So it's not like, it's not like, 2020 and 2021, the Wall Street has seen some really weird stocks go up. And of course, that's a little bit true. But overall, what I'm trying to say here is that Clover got hit hard right now. And they got hit to a point where, they wanted to take advantage of this kind of crazy money in the stock market so they could essentially expand faster. So essentially, the price targets that we should expect in 2030 would come in 2026, 2025 versus 2030. So it's like, imagine if we're living in 2010, but, Humana and United Healthcare's prices didn't start going up until, 2018, 2019, and 2020 and 2021. Well, if we can go ahead and let's say 2020, 2010, and 2011 had some crazy growth spurts of just money, might as well accelerate it. Now, for all the folks, and we know we have a lot of doctors watch our channel here, just think back to when you're in chemistry. You know how I'm going to remind you, an enzyme, you know how it decreases the activation energy? So just really quickly, and folks that are not really, into science, this will be kind of useful too. Maybe kind of go over your head a little bit, but it's fine. So if you have, let's say, for example, Clover starting out to Clover finishing off to becoming successful, there's always a hump. A barrier of entry, right? And this is called the activation energy. And usually an enzyme, activation energy of a catalyzed reaction. So enzymes, what they do is they decrease the activation energy. It doesn't mean that they're going to be essentially more products it doesn't add more reactants, nor does it act more products. It just makes the reaction go faster this way, right? So essentially that's what's happening right now with 2020 and 2021. Clover's people, what they wanted to do is they essentially wanted to go in and try to spread their Clover Assistant, which we will go into more close in the middle to the end of the video, because that's really the cush part. Very, very amazing here. But Clover wanted to basically get to that level because there's a lot of pain. There's so much pain going up this mountain, especially incumbents set a lot of traps and booby traps here. And Clover's just trying to dive through that, okay? But unfortunately, what ended up happening was the market turned. And the market said, listen, if you're not profitable, you're out of the stock market. You're going to go to the penny, to the swamps, okay? Get out of here. You don't belong in NASDAQ, right? It was a clear-cut message to essentially the Clover Health Management Group, obviously shareholders, direct message to the board that, Wall Street's Wall Street's changing right now, at least. Okay. Take a little bit. So with that, now they're prioritizing profitability. But I want you to be I want this to be like, sometimes I have to say, I need to be clear. Okay. Clover is about to turn down their revenue a little bit. Okay. And if you think it's all about revenue, then obviously, I'm not trying to put you down. You're a new investor. Okay. It's not about revenue, guys. It's about cash flow. It's about being able to take that money and adding it to the cash flow and generating future free cash flows, which then allows people like us and people in Wall Street could go in and measure these cash flows and extend them 10 years into the future and discount essentially get back to the present value of the future free cash flows to find what is the value of the stock. And it's very clear that this company's undervalued to the freaking ground. It is so undervalued. Okay. Extremely. Okay. So they also talk about the MA flywheel. Okay. So this is very important. Okay. Amazon created a flywheel business model. Tesla created a flywheel business model. Flywheel business models are extremely successful. And we'll go over this for people that are interested, more so in people, to teach them how, people that are interested in wanting to start their own business or wanting to be able to identify businesses that have a particular flywheel. Now, I'm going to take a quick, just a quick little kind of a detour here. And this was in back in the day. He said, yeah, I just want to just add to that, because I think this is something where we can bring techniques that we can see from SaaS world into the world of healthcare, which I wish was already here. While I'm going to just highlight this needs to be read too. While we've not announced exactly what we're doing, we do have user researchers in the field. They spend time with the physicians. They gather qual and quant research. We have data in the actual application because it's real time to measure engagement of every single feature. So we have a lot of data that we can use appropriate modern techniques to drive top and maintain high engagement, and we'll be excited to talk more about this stuff. Now, who in here, and if Andrew's watching this, who in here is like, come on, Andrew, you're killing me. Tell me what you know. Come on, Andrew. It's like, I'm not going to use this example. It's not a good example. I'll use it in our private stock terminal. But how many times, it's like, he gives you this thing and it's like, come on, Andrew, spill the beans. Well, guys, listen, there's a reason why Andrew is not spilling the beans. Right now, we have access to this information. Don't you think Humana has access to this? Don't you think? Come on, guys. Don't you think? United Healthcare has access to this. I mean, there are a lot of folks out there that get paid millions of dollars to keep tabs on these companies and report things that are significantly changed. And then Humana gets it and tries to go ahead and copies it. And you might ask yourself, well, hey, how did this why doesn't Humana just crush Clover? We'll talk about that. In fact, this document goes ahead and talks about that too. Okay. But overall, it has to do with the technology and data that they have that the Clover Assistant offers. Okay. So overall, we are going to see the technology side of the company in the next 5 years. Okay. Heed this, warning. Okay. We are going to see, or here, heed this flag. We are going to see the technology side of Clover become very apparent in the next 5 years. All right. So let's go backwards. This was page 38. Okay. Let's go back. Again, this is for long-term investors. If you're a short-term investor, this might be boring to you because this is not for you. This is for people that these are people for long. These are for long-term investors. Okay. Long-term investors only here. Okay. All right. So let's go ahead and let me drink some coffee a little bit here. Let's go through the questions here. Okay. We could definitely take a look at that. Definitely will. Maybe in our monthly meetings we have on our private stock/terminal group. For just quick shout out, we do have a 7-day free trial. There'll be a link down below for anyone who's interested. Okay. Face green smile. I don't really see the actual emoji. Kind of sucks. I'm sorry. Um, do you believe there's any possibility of this company to go bankrupt before achieving profitability? What would you rate it from 1% to 100%? So Peter, we actually have scores called the Altman score and also called the Petrosky score that you can use to calculate the bankruptcy effect. And we have that in our proprietary stock terminal and our proprietary brain machine technology. So we actually have that. So you could definitely take a look at that. We've made a video about it in the past. Okay. All right. So then now, let's see here. Okay. So we've increased so this is where it gets kind of weird. We've increased our estimate of covered lives, right, in direct contracting from 450,000 in 2023 when we first announced the deal to instead of 500,000 in 2022. Okay. This is wrong. They don't have that many lives under management right now in comparison to what this number is, right? So again, this is where, Clover paused in 2022. They realized that, honestly, November of 2021, because this is 2020, right? They talked. In 2021, November, they realized that they need to raise capital in November instead of in 2022 because they specifically stated that there's going to be a recession, most likely. Okay. And they had to raise capital in November because if they raise capital now, it would have diluted shareholders even more. I mean, think about it. Would you rather have been diluted at $5 or freaking 82 cents or whatever it is, right? So that's kind of the idea here. So what from my experience, what does this tell me? What does this sentence tell me? It tells me that they're decreasing growth because they want to wait out this, whatever the shitty market we're in, they want to wait it out. A lot, and it's not that they're not the only company that's doing this. Any company that wants to survive for the next 10 to 20, 30 years, they need to slow down their growth and stop burning cash because Wall Street's and shareholders are not going to bail them out because a lot of shareholders now and retail investors are about to get screwed this year when it comes to increased levels of credit card debt that we haven't seen. We have seen it before, but they have very high levels of credit card debt. Things are getting more expensive. Egg prices are just, phenomenally expensive. I mean, come on, eggs. I mean, Jesus Christ. You might see a couple of chickens here in the back, start walking here. Like, that's okay. Those are my eggs right there. Right. I'm just kidding. So overall, imagine, because I don't know, sometimes you guys always see my dogs. So overall, this tells me that they're already made the changes to achieve profitability. Okay. So here's another one. Okay. So this one says that because of the Clover Assistant, their gross margins will be about 29%. Okay. From the revenue that they've recorded. And this is from the data that they have. Now let's fast forward to like the last page. Okay. One of the analysts, Steve Tannell, said, Vivek, I'd love to go through a little bit more, but maybe just as one follow-up, one other thing that I've noted to come back on was something Joe said around the example on the 29% gross margins on DCE, which is impressive, right? So I'm like, I don't know that I followed that math exactly. So maybe, Joe, if you could just kind of walk me back through some examples, please, right? So Joe goes ahead and explains it. Okay, I can go ahead and zoom in here. Whoopsies. You can pause the video later on if you're watching it. Okay, he explains it. Okay, then the guy said, that's perfect. I think what I missed was the 4% savings in example. So I'm good. Thank you so much. And then he goes ahead and another guy comes in and says, okay, great. So Clover Assistant seems to be a big driver to that story. I didn't think about margins, the ability to drive savings, improve benefits, and drive memberships. So you guys have to understand here. Okay. The magic is in the Clover Assistant. All right. This is not an insurance company. Okay. You're going to look at me. You're going to say, is Albert gone stupid? Is Albert, is Al crazy? Like what the hell is he talking about? It's not an insurance company. They're freaking Clover Health. They're an insurance company. They don't get, okay, I shouldn't say, I shouldn't go too far and say, they don't care about the insurance side of things, guys. That's not their incentive. That's not their incentive. Okay. Let's see if we can, okay, let's read this. Okay. And I'll explain why. So what direct contracting allows us to do, so Andrew referenced 3 of the 8 states that we were launching direct contracting in. We do not have an MA plan. And so the Clover's presence, and that's going to expand to hopefully many more states beyond that. And this is where the biggest, if you don't take, this is the biggest thing to take away. Okay. So those 3 states, and honestly, it's this sentence here. Okay. So that Clover Assistant is really what's being deployed. Okay. So let's go ahead and let's go ahead and let's do this. Clover Assistant is really what's being deployed. Okay. Clover Assistant is what's really being deployed here. They don't care about the insurance. It's the technology that will drive gross margins at near of over 1,000 basis points that battles incumbents' ability to be able to do that. Okay. Okay. So that's essentially what's going on. Yeah, I know that's hilarious. I just saw that. I just read that. That's hilarious. Yeah, it's gonna be very, very funny to see in 10 years, right? This is healthcare, okay? By the way, I do like Palantir. We're gonna make a Palantir video soon. It's reached a really good pricing that I definitely should talk about it. Okay, so overall, there is more. There's more to this. Okay. And this one basically talks about returning members MCR range 70 to 70. So they're saying like old members versus new members and new members that haven't showed up. They were able to essentially take the 95% to 105% and bring them down to 70% to 85% going forward. That's impressive in terms of their MCR, right? For them to do something like that. So I don't want to make this video too long. I wanted to make it just enough. There is more information that I went over that I want to talk about, but what I'm going to do is I'm going to save this, right? And I'm going to put it in our Clover Health private stock group. And if people want access to it, we do have a 7-day free trial, so it's no risk. You can also see our stock terminal, so it'll be there. And people can kind of read through the highlights here, okay? But yeah, so that's all I have for you guys. This is just to kind of give you an understanding, just so let's bring it back. So kind of what did I get out of this? Reading. Okay, well, Clover's been trying to become profitable for quite some time. COVID came. 2019 they're trying to reach profitability, which they got close. COVID came, and COVID screwed them. Then, they're like, okay, fine. We have a great market. Money is crazy. So let's go ahead and expand. Let's try to expand as fast as possible. Let's grow at over 100%. Fine. Let's burn cash. We rather just burn a couple, $100 million now, because in the future, we're going to be making, literally a crap ton of money because we took our Clover Assistant and we basically spread it across. So the biggest thing here is now they're essentially, think of it like a spigot or whatever, kind of like a little valve here. And this valve is controlled by how much Clover wants to grow, right? It's almost this valve here, right? And the valve can be essentially tapered lower or higher. So what they're doing now is they're going to essentially taper it lower. and they're going to slow it down. Okay, and once they slow down this growth, they're going to try to essentially prove that, hey, we have a business model. Here's profitability. All right, here's our MCR. Look at that. We're free cash flow positive. You see, we can do it. We can do it. Here's your intrinsic value. We could just do this and we can grow at this rate. And then once they're going to do this, they're going to chill. They're going to do this. And all the cash burn that they did in the past, and I need you to listen to me, right? Right. Sadly, long-term investors, they're probably, they've been listening to me. If all that cash burn that they did, that cash burn that they had, when they expanded into all those states, all those counties through the direct contracting, all those patients have been integrated and have been admitted into the Clover Assistant University. And over the next, 2023, 2024, 2025, that crazy growth that they did is going to add tremendous, tremendous free cash flow to the company, that once the recession blows over, once the 10-year federal note or the 10-year treasury is higher than the 2-year, and once we have a not inverted yield curve, once inflation is at its 2 to 3% target rate, maybe 4%, right? Once the Federal Reserve decreases interest rates and they're at near zero, and the National Bureau of Economic Research, NBER, declares a recession. I'm literally mapping things out for you guys. Okay. I'm literally mapping things out, right? This is like, YouTube has made things so easier to teach, and to literally take, 10 years of experience and just be able to transfer it. Just a freaking video is amazing. Okay. It's amazing. Okay. So, and with that, once we get that 0% interest rates or near zero, once they go ahead and go it down, then Clover, what are they going to do? What are they going to do? They're going to increase the level of growth. They're going to increase it. They're going to turn it up. And then they're going to get at this level here. Let me show you. Let me show you. They're going to try to get at 500,000 lives. 1 million lives. 2 million lives. 5 million lives. They're going to try to get at that level. Okay? And once they get at that level, we are going to, it's going to be amazing. It's going to be amazing. And the workaholic in my mind, it's not like, oh my God, what am I going to do with this amazing growth? I'm going to look for the next company, right? Because, that's, or if they continue on their pathway, then we might even see that their Humana is going to get a run for its money. So once we get to that level in 2027 and 2028, then we will see, is this a stock that, people, I would just hold until I turn 60. Is this the type of company that that's it, you just hold, right? That requires more due diligence and more data than what is given right now. Okay. So overall, if you enjoyed this video, please smash the like button and help get this out. Also, please subscribe if you haven't done so. And lastly, we do have a 7-day free trial on our stock terminal, which has been featured on Bloomberg, Yahoo Finance, and Benzinga. So we've been working really hard and developed something of a tremendous value to retail investors around the world. So I'm very excited to see you there. Also, we do meet on that terminal. We do meet once a month for 2 hours. So I just try to inject a lot of value in there. And you can talk to other people. And a lot of folks on there. We have a couple of millionaires on there. And I'm very thankful that they do help. And I'm very thankful that they do give their insights and help the community in there grow. So I'm very happy with that. Okay. And I'm happy of what we're building. Okay. I'll see you on the next one.